Hello, fellow traders. 'Tis I, the Rumpled One. It is Monday, October the 1st, the year 2018. Let's talk trading. How many trades? How many trades do you make in a day, a week, a month, a year? Is that part of your plan? Do you say I'm going to trade so many times a day? What if you what if you have a day that's zero? Is that a something to be avoided? Because we know there's opportunities all the time in trading. But what if there's no opportunity that fits your criteria? I mean, for example, if you're trading the buy zone and all the prices are outside the buy zone, does that mean you should try to find another trade or just say, okay, no buy zone trades, wait for the next day? So it's something to really think about as you're looking at your charts, because some people, if they don't have a trade on, the first pair, then they move on to the second pair. Is their trade. It's like, where's the action? So do you chase the action or do you let the action come to you? I mean, it's something to really think about as you go about your trading day. And something else not to think about, but to practice and to put into practice is your money and risk management. Make sure you do that every day because we're going to have a great month of money management, aren't we? So here we go. The euro yen. Right now it is exiting the upper wick zone of the monthly. So one of the things, if you notice, I talk about the wick zones a lot, but that's because they're based off a high, low, and the open and the close of the previous candle. So most of trading is usually based off of those levels, unless you're using some squiggly lines. But for the most part, we're going to be basing trades off the high, close, open, and low of a previous candle, whether it's minute, hourly, or monthly, weekly, daily. But if you really look at it, now of course you have midpoints and you have pivots, but most of the trades are going to be based off of those lines. And you can see here, we exited the upper wick zone of the weekly and we entered the lower wick zone of the weekly. The question is, do we pop out of this side or do we pop back the other way? Now, let's see. We still have some gaps that haven't been filled, but remember yesterday, the euro yen was an open gap. So there was one trade that you still had the opportunity to take advantage of. Now, the only question is, did you? And so you can see here, we are heading south, exiting the candle body, previous candle body area into that lower wick zone. You see we 66 pips above it, so it's got a long way to go, and only 6 pips below. So it's got a long way to go to exit this to the south side. And let's see here. We look at the daily range, 1, 2, 3, 4, 5, 6, 7, 8, 9 over 100. Euro yen clocking in at 72, dollar at 36. That's 2 to 1. Once again showing why we are focusing on euro yen now. But the pound pairs have definitely been moving a whole lot, like back in the old days. So those of you who like to trade the pound dollar or one of the other pound pairs like the beast, or maybe we should call the pound New Zealand the new beast because it seems to be outpacing the beast like crazy. But once again, just looking at those previous candle high and low, you see there was a break there. That was definitely a profitable trade. Now you can also see it reversed on you. So that's why you shouldn't be so worried about only taking 5 or 10 pips off a trade. Because if you can do that on a regular recurring basis with the proper money and risk management, you'll be able to build up your account over time. And yesterday we saw this area. You see here we had a buy zone trigger that resulted in either a scratch because it closed below the open. So either you scratched there or maybe you scratched here on that trigger. You see we had a trigger and there was an opportunity to take profit here. And if you entered it this time and then it reversed, not quite hitting a stop, then it came back here, you may have scratched if you stayed in that trade. But right here is where you definitely should have taken profit when it pulled back. And you can see it pulled back to that level once, twice, 3 times right there at that level. So there's no reason not to take what? Those 5, 6 pips. And you see here we had a buy zone trigger here, not enough to stop out. And once again, right here, should have taken profit about this area for sure. Or as it exited this wick zone right here, should have taken that profit off the table because you see right here, it may have triggered your stop. Then we had another buy zone. You see here, it failed to make a new high. Came out of this wick zone once again. Right here is the level you should have taken profit. And here you see you had an entry, went up, and then it fell back. Right there is a level to take profit. Then you had a buy zone trigger here, our sell zone trigger actually, and then it started moving against you. And so, once again, right about there, if not right here, because you see it made a lower low, and then it came back to the previous lowest low for this session. And right there is a good place to take profit. Because people keep asking me where to take profit. And once again, here, if you went short here, you see this pivot point right there was a good place to take profit. Because they always want to know, where do you take profit? Well, what you do is, what I do is, once again, you just look at these highs and lows, and when it goes up and comes back the other way, if you're in profit, take the profit. Yeah, it could turn around and reverse and go further, but you just never know. So take profit off the table. And now we're in the lower green rat zone here. There's a red rat zone, green rat zone. And you can see right here, it looks like we're in a rat reversal situation. And we've got 72 pips. So the trade is on in real time. And once again, we covered that pivot. Yesterday, we hadn't covered the pivot. In fact, I think we had, I don't remember if we had a green candle or a red candle, but if we did, the green candle was somewhere here. And you can see that would have been a nice trade, taking out that pivot. Price action. Once again, we are doing the price action using the 3-level ZZ. One ball at the top, right at the line short. One ball at the bottom, green at the line. And right here, you see you had one. There's a nice 20 pip trade that hour. Here, 3 ball, red at the line. Right there, it was right at that line. And you see here, 1, 10, 20. Actually, about a 30 pip trade off of that price action. So if you put your stop loss accordingly, if you enter long here, you can put your stop loss there, that 10 pip. You see here, you picked up some nice pips. And you see there was a continuing 3 ball at the top. And so there wasn't a 1 ball down here to change it. So you could then keep going short, red at the line. Now, 2 ball at the bottom. That was red at the line. You could jump in if you wanted to, but the actual trade is right here, green at the line. But I don't tell people to jump in. No, just trade the opportunity as you see it. So you could say, well, 2 ball at the bottom, I don't care what color it is at the line, it's going that way, which if that's what your indicator is telling you, it's okay to do that. Just be ready to, of course, have your money and risk management set up, your stop loss in place, so in case it goes against you, you don't lose too much. And yesterday we didn't have anything at the line. Here we did. We had a touched the line, moved the other way, came back through. That might have been a scratch trade or a couple pips to the good side. We crossed the line here, crossed the line there, profit, crossed the line here for profit. And again, we crossed the line for profit. That crossed the line for profit. But not much profit, maybe just 2 to 5 pips. I mean, in this particular case, we had what? Oh, what, 11 pip profit? That's not too bad. So you see here, just take those profits when you can. 11.3 pips. Not a bad trade. Wick zone, in and out, in and out. Once again, you see it failed to enter that wick zone, came here. That looks like a scratch. Once again, same thing. There's your profit. Here's your profit right there. Out of the wick zone, hit that midpoint. That's a place where if it doesn't cross, it's going to bounce. Midpoint, you could say 50% fib retrace. Here we go, lowest open, a Larry live trade right here. You're about 5 pips late, but 131.80, there is your lowest H1 open trigger. You can see here you had an opportunity to take advantage of that 132.40 short, which would have paid off nicely. And just going back, you see it never threatened the exit here. So you put your stop right here, nice position size, 5 pips. So it would have been a lower position size, but it would have paid off nicely had you ridden it all the way down. And the stop was never threatened. Okay, inventory reduction. We had a short that triggered there. And that was about it. Previous daily, weekly, and monthly open, high, and low. Once again, here's the previous week's open. We're just trading right there. You can see it's oscillating, poked through that previous day's high. We've seen that on the other charts. Coming back through week open, previous daily session open, and down. And you can see here from the tick chart, we've had some upward action here. You see we had a little downturn right here. Selling kicked in, but then buying turned right back around. Right at almost the same level, just a few ticks off. And right here, you see we just touched that point right there, almost triggered selling. But we're still buying. See the bid is below that valley. You see how that dipped below and came back there? And so you see that was the buying, waiting, buying, waiting, buying, waiting. See, buying, waiting, buying, waiting, buying, waiting. Now buying again. And so right here, you see, triggered a long oscillation, short. Put your stop right there. That's about 5 pip. Once again, small small position